Good morning, good afternoon, good evening. I'm very pleased and happy to welcome you to this session. This is one of our first sessions, first online sessions for Africa India Business Network. Welcome, Janet. Janet is a friend, partner, someone who spent life both in large in the banking in development banking in the startup world. Uh, I have before I allow Junaid, you'll have to give me just quick 2 minutes to introduce Arunima, who you will see very soon. Aruna works for Singhi Advisors. I have a personal relation with Singhi Advisors for many years. So I'm really pleased that we have been able to get her. She's worked one of those rare persons who left her investment banking job to work on a startup. So she has her own experience that she may want to share with us and then tell us. We have Angelique, who works for BDO Corporate Advisory in Kigali. I had the pleasure of meeting her about 6 months back. Uh, Very bright. I really like her. She has, and then she's sitting in a place like Kigali that itself is, as we know, is becoming a center for innovation and entrepreneurship in Africa. Um, yeah, Anshul is Naveen's friend. Anshul works for Investec Bank in India, uh, and he is an MBA from the Nursing Home Institute uh, in Bombay and from National Institute of Technology in Bhopal. We have Yogesh, who's a little brief I did give just now. He's got over 20 years experience in financial reporting, corporate development, deal making. He's worked across both India and Africa. Let me just quickly enlighten you that we have two women, two females in our panel. So our panel is very well gender well, balanced. We have two from India. So Anshul and Arunima are from India. We have Angelique and Yogesh from Africa, and obviously we have Janet also from Africa. So thank you everyone, and welcome Janet.
Thank you, Praljender. Good morning, everybody. Yeah, it's good to meet and be online talking about M&A. Praljender asked me just to give you a quick snapshot of M&A activity in Africa and why we actually need more M&A activity. So just to contextualize it, obviously on a global scale, there's been a resurgence in M&A activity and investing since the COVID pandemic, and we see that there's a lot more deal making happening globally. If you look at the numbers, 2023, about 4 trillion worth of M&A activity globally into 30,000 transactions. Now, Africa is a very small part of that. Africa last year had 30 billion worth of transactions across 700 M&A transactions in total. And if you then break that down into VC over the past 2 years, so 2022, 2023, 147 M&A activity in terms of exits, either through larger African corporates acquiring or doing JVs with startups, or actually the most activity is larger global tech startups acquiring African tech startups. So it is a nascent market because actually VC in Africa is really only about 10 years old, but we are now seeing that how M&A is growing faster as this ecosystem is maturing. And then you have to ask yourself, why Africa, right? So we know the potential of Africa, which is really the demographic divide. The average age of Africans right now is 19 years old. I was looking for a figure for India, but I get a number of 32, but although I think it's probably in the late 20s, but certainly from the African continent, it is one of the youngest continents in terms of age. In 2050, it will actually be much younger. The average age will be 15 years years old. And that's because of the birth rate that is consistently around 6 per household. And besides the demographic divide, there's also the rising middle class and the increase in consumer spending. And so the dollar per day spend of Africans have been increasing, particularly over the past 15 years. And we see that there has been a rapid increase since the COVID period, as people are now spending more online. And we have really jumped the digital curve because COVID allowed us, and almost in a way forced us, to be more online in terms of healthcare, access to education, e-commerce, and just the ability to transact. Africa also has the largest resource mineral base in the world, and certainly the most arable land. And we're seeing how the grab for arable land is happening through acquisitions by the West, the US. The Middle East is the largest acquirer of commercial farming land in Africa at the moment. And we're seeing the potential for especially agri-tech or food security through the African continent being a significant global player going forward. But you can't discuss Africa with some of its challenges. Of course, there is a lot of political uncertainty, but there's political uncertainty throughout the world these days. There is a lot of regulatory uncertainty within certain African markets. There's definitely a infrastructure deficit as governments are needing to engage with the fast-growing economies on some of the African continents. Of the top 10 global highest GDP growth rates, 7 of them are in the African continent, particularly in West Africa, particularly also in Francophone Africa. And then there's the lack of access to funding and liquidity. And just the final couple of points that I made is, as we are 10 years into this journey, we have a lot of companies, 11 companies, that in a very short space of time have reached unicorn status. And that is fantastic because that puts Africa on the map. But what we need more are smaller M&A and exit opportunities for startups. We need to produce those companies that have an exit at 10 million, 20 million, 40 million, 50 million, because those create the quicker liquidity events within the African ecosystem. And the more liquidity we have, we know through seeing it in other regions, more investment comes into that region. And so our goal at Launch Africa is to ensure that there's an M&A activity within our portfolio. We've got a portfolio of 148 companies, but more so, how do we bring in external other later stage companies or other corporates that want to engage with our portfolio with a potential to either acquire them or do commercial collaborations with them. And so our goal is not only to build those unicorn companies, but is to build those companies that are able to create liquidity for the founders and the founding team, but also to create liquidity in the African ecosystem. Baljinder, that's some of the snapshot points that I wanted to make. Happy to take any questions.
Yeah. So, Junaid, we've kept questions for the later part. We are running late by 5 minutes, so I won't hold, and we will let the panel begin. The way the panel is the event is structured, this online event, used to just regular events. The way this is structured is that our 4 speakers, panelists, will each have 10 minutes to generally, and we want to keep this really kind of informal. It's almost like we're having a chat, and that was something that we had thought right in the beginning. So we don't want to make this kind of lecturing, or we would really want to share our experience, our insights with the larger group, and then get the group also to kind of engage with us in a very honest and upfront conversation. Again, this is not a teaching or learning exercise. This is an exercise to kind of really help each other, across both sides of the ocean to be able to achieve our larger objective, which is to be able to receive funding or receive strategic investment. So I have already introduced the panels. Some So shall we just begin? Emmanuel, I'm lost here, but would you want to take on, or Naveen would take on from me and then guide the panel discussion?
Yes, thank you so much, Balijendra, for the warm introduction and also setting up the ground for this discussion. I think I would like to invite our panelists, and our first panelist would be Arunima, and then Angelique, and then we'll have Anshal, and finally we'll have your guests to share their presentations. So Arunima, you can take over, introduce yourself, and share with us your insights. Thank you.
Sure. Thank you. Thank you so much, Baljender, Jain, and Emmanuel for the introduction and introductory remarks. I think you have introduced myself. I'm Arunima. I'm a director with Singhi Advisors. So I have recently started my investment banking journey. I have been with in corporate roles in private equity, VC, had my stint as, on my own as an entrepreneur as well, as Baljender mentioned. But here I'm going to speak more from an IB and M&A lens. So let me just, I've put up a few slides to make this a bit more structured. I understand Baljender wants it to be more free-flowing, but I'm sure, I mean, whichever way the audience want, we can take it forward in the Q&A. Emmanuel, please confirm if my slide is visible. All right, I believe it is. So I have taken the liberty, since it's a free-flowing discussion, of tweaking the topic a little bit, catalyzing M&As and strategic partnerships for expansive growth. But I promise I will touch upon startups as well. So I'll just 1 second. Yeah, sorry. Has the slide moved? Yes. Okay, so I'll quickly run past the flow. I'm going to take you all through strategic M&A and partnership opportunities across a business life cycle, wherein we'll see what can be the different types of flavors of M&A, and also the vectors which enable these types of M&A strategies at different stages of your business life cycle. Then we'll go through typical traits of stagnating businesses, which is very important for a business in the maturity stage to understand. We have curated a few success stories and also mapped it against the M&A strategies which were adopted by some of these players, both in India and Africa. Then there is, of course, which sectors, which industries and areas, new age, conventional, do we as Singhi advisors feel that are bullish on and feel that more M&A opportunities are there. And then so a little bit about how geared up we are to play a meaningful role. And then since there was a requirement for one of the sectors, then I want to present the financial inclusion story of India, which we take a lot of pride in. But before getting into the main thing, I have a confession to make here. When Baljender reached out to me for this session the first time, my reaction was, Africa. I know this continent fairly well, so it shouldn't be a challenge speaking about it and the interplay with India. But trust me, when I started reading about Africa and the intricate interplay with our nation, it's overwhelming. I mean, the country is, it wasn't possible for me to put these maps to scale, because Africa is 10 times our size. But look at some interesting facts here. See, our GDPs and our population are almost at par right now. What does it say? Africa per kilometer opportunity in terms of income, in terms of GDP is tremendous. While, as Jain also mentioned, there are certain inherent challenges, but I'm sure some of those will be overcome. But irrespective of that, the opportunity this continent has is humongous. Another thing which Jain touched upon, so in India, the average age is around 27, 28 years. But look at population under 25 years of age. 60% in Africa, 50% for us. So these two geographies are going to have the the advantage of the demographic dividend for the next 2 decades. So let's make the most of it. Africa, of course, has a very high income disparity, around 1,000% from the average. And in India, also, we do deal with income disparity as one of the issues, but it's still much lower because it's a homogeneous make. Heterogeneous make, while it is it has its challenges, but sometimes attaching to one piece in this entire conundrum becomes the entry point becomes easier, and then you can have so we also have some case studies wherein we'll show that how some of the especially consumer brands enter one of the geographies and then expand to the other areas. Moving forward, as I was talking, that a business life cycle wherein we have divided it into 2 phases, four phases, sorry, startup, growth, stagnation, and decline. What are the key reasons why M&A happen and key vectors which lead to such M&As from both sides, the buyer and the seller, or if it's a partnership from all the stakeholders involved. So let's start with startups. Now, when you are so you have ideated a concept, you are in the product development stage, you know the market, you have maybe you are post-rev, some revenue earning, but still you are in the startup journey. Here, you're more of a target. Now, targeted for what reasons? And we have all seen examples of that. So it could be strategic partnerships, build versus buy decision by larger companies and conglomerates. Technology acquisition. If you have built something which is, which is IP, patented, then you become you get the value for that also, and you become a very good target for a tech-led company. There's also a concept of talent acquisition or an acqui-hire. So while I always say that you cannot employ entrepreneurs, and which is why an acqui-hire is somewhere, it's most in the people's business, wherein you see talent and the promoter is the driving force. So you hire them with some sweat equity or some skin in the game for them as well. Of course, startups are agile. They have better adaptability to the changing landscape or the even the regulatory scenarios. So that is also one of the reasons wherein these startups become an attractive target. Diversification. So, for example, even if it's not a horizontal or a vertical integration, sometimes diversification de-risks your. So, for example, if it's a petrochemical business, highly cyclical. So a petrochemical giant may want to get into technology to de-risk their cyclicality risk, which is there. So diversification is one reason. Brand licensing, entering new geographies. You will take 2-3 years to understand a new geography, set up, you have capital expenditures, etc., etc. So the time to market becomes very quick if you have to enter new geographies. Killing competition, of course, which we have seen in a lot of consumer space in India as well. Growth and portfolio strategies. Then some companies have the very make or DNA only of a platform structure. So they have bolt-on acquisitions, build, buy and build. They keep acquiring and keep building and growing. And of course, they have an exit strategy also. So while they are sort of a pseudo funds, but they also have an operating partner kind of a model. Roll-up commerce, which we have seen a Thrasio model of Amazon, wherein you keep acquiring brands which are doing well. Build to exit, of course, some of the founders may have that very mindset only that I have to take it up to a particular stage and then get absorbed by a larger player. So that's kind of M&A which we see very usually in the startup space. Now coming to the growth stage, wherein of course you are targeted by both B, which is a growth company, or C, which is a company which is mature enough. Upscaling or vertical integration could be the reason. Upscaling, horizontal diversification, hedging the risk. Similar reasons, but different. I would say the contours become of the deal becomes a bit different. Now, if you will see, and let me just use the pointer here. If you will see, so the latter half of your growth stage is somewhere we call you should start identifying gaps very proactively. While we always say that, the entire journey, be it an entrepreneur at our personal level, also introspection is very important. So for your business also, identifying gaps is very important. So, and we also say that you identify, ideate, and initiate, which are also the 3 I's in Singhi Advisors. So the proactive stage can really lead you to a exponential growth. So here you have to start introspecting. Maybe you find some gaps, which could be corporate structuring, market, financial structuring. And then you fill these gaps with the various kind of M&As. It could be partnership. It could be some non-core assets that you want to divest even at an early stage. It could be JVs you want to get into because you're seeing some potential in a parallel technology that's coming up. and others. So and then when you start reacting to a stagnant stage, and I'll show you the key reasons for a stagnant business, then you get into the reactive M&A stage, wherein of course you will benefit from taking that approach, but the benefit will be limited. And then decline. If you don't act, you're going to decline, you're bound to decline. And here your problem becomes someone else's opportunity. So there are buyout funds, value investing funds, which are waiting for companies to reach that state and then get the right value out of it. Moving on, typical traits of stagnating business: traditional mindset, inflexibility, resistance to change, changing revenue instead of building value, lacking analogy of ROC. So people generally tend to look more at growth and EBITDA or at max at. But your return on capital employed is a very important metric which often goes unnoticed. So if you don't have all the three, all of them looked at together, you are bound to not be looking at the complete picture. Debt chasing and asset heavy, taken as given generation to generation, succession issues, limited delegation, get into action only when they hit the wall. So that's why we are again and again saying that be proactive in identifying gaps in your business. Now this slide, we have what I was talking about, curating some of the success stories in Indo-African corridor, and we take pride that we have also been party to some of these marquee transactions. So the kind of strategies which can be and have been adopted, and it doesn't need to be one strategy only. It could be one after the other. For example, local partnerships. So a lot of players like Bajaj is a textbook example, I would say, and consumer brands like Dabur or Dr. Reddy's, they got into local distribution partnership, because this also hedges your risk that you are partnering with someone who knows the business, who knows the market and already has a channel, but you are selling your products. And then when you start understanding the local consumer, you get into either an acquisition or a localized setup or a JV, whatever suits you, depending on your strengths, capabilities, and the target company's strategic advantages. So we can see some of the examples here. We have Bajaj, as I said, TVS, Dr. Reddy's, BAML, Tata International, Parle. I think Parle G is synonymous to daily chai wala biscuits for I think a lot of African countries as well. The second is M&A. Of course, a lot of companies wouldn't want to get into M&A upfront, but understand the market through local partnerships. But we have seen, for example, Fortis and Seal, they got into Mauritian. Seal was a partner there. Fortis has become one of the, I think, largest hospitals in Mauritius. We were party to this transaction as well. Airtel, again, a very good story, which 10 years back, if you would have asked me, maybe it wasn't a success story, but today it definitely is. I think 27% of Airtel's revenue from Africa is coming, consolidated revenue is coming from Africa. So Zain Technologies was something they acquired. And likewise, Cipla, Metro, again, a very interesting story. Then comes JVs. Again, if two, mostly these are both strong and capable parties in the two countries, and they come together because they want to create that complementary. Of course, there are synergies, but that there are complementarities they want to leverage. Vedanta has used that route. Sanlam got into India first through SLC, and then they also formed a JV with Shriram Finance. They started a fund on their own, but without a partner, they couldn't succeed much. But their JV has really been a success story. Tech Mahindra, SR, Fabtech, which is doing a lot of work in clean tech. They also clean room technologies. They are also in Africa, Ashok Leyland. Of course, commercial vehicles have automobile has been a very good story between Africa and India. Localized setup, I would again pick up on Bajaj, because when they started understanding the consumer, they had a localized assembly lines, the whole ecosystem around ancillary maintenance, OEM, tier 2, tier 3 suppliers started coming up. They started understanding the consumer demand, and then they created products which are only made for African markets. For example, Bajaj Boxer, we don't get it in India. So that kind of understanding of the market can only come once you have spent 5 to 8 years in a particular geography. And today Bajaj along with TVS commands around 50% of the market share in two-wheelers, which we have mostly taken from the Chinese companies. iShare, and again, CL is there. As Baljinder said, CL is almost present quite a big name in Africa. Tata Steel is another player which has done multiple JVs and acquisitions in Africa. Then we move to greenfield. Of course, if you have the muscle power, you are sure of what you're doing, you are ready to take the risk, you get into greenfield projects. That's why the names you would see mostly are biggies in India, HDFC, Piramal, DTDC. We also have some interesting stories of, for example, the Sab Miller acquisition that was from Africa into India, Smolan, First Rand, and others. Last is strategic investment. Of course, if you don't want to get into a pure play M&A, then you can take a strategic. Now, strategic investment could be either a significant minority or a controlling stake. It depends, but there are some synergies, something which is more strategic in nature. So technology transfer, market penetration, integration, control and influence, whatever is the reason, this is also one way in which you can enter a market. Naspers is I think, a very good example of Africa. Marico, Cipla, Apollo, Godrej, Lupin. Moving forward, and now I'll quickly touch upon what do we see as the key opportunity areas. The list is long, but we totally believe in it. And so consumer business, which comes as a very obvious play because 1.7 billion consumers, the consumer expenditure is expected to reach 2.5 trillion USD by 2030. Expansion in retail and distribution backed by rapid urbanization, internet and phone penetration. So a very similar story which has happened over the last decade in India. Key markets could be Nigeria, Egypt, South Africa, and others. These are larger markets. That's why we mentioned this. Financial services now, while Tala, Mobile, M-Pesa have created their niche stories in Africa, but we still feel that a digital infrastructure, open source, like UPI, with the kind of magic it has created in India and the whole world is talking about it. So India is in talks with, NCPI is in talks with countries like Namibia, Mozambique, and Kenya to help them develop their own UPI. Now, and of course, conclude some commercial partnerships, just like we have done with Southeast Asia. So the moment you have a country has their own digital infrastructure open source, a whole ecosystem around it starts evolving, be it fintech, private capital inflow, financial inclusion in true sense, because M-Pesa doesn't mandate you to have a bank account, but UPI is bringing everyone into the main banking system, and that's the beauty of this thing. So I'll show you how much financial inclusion has happened in India. Better trade practices, of course, when you start getting into the digital payments mode, of course, transparency improves. Mining and minerals, I think it's very obvious, so I'm not getting into the details. IT and business outsourcing, we are seeing a lot of inflow of queries in terms of good businesses in Africa, which are into these outsourcing businesses. Automotive, it's always been an interesting market. Indian players have a dominant play, which will continue to grow, be it passenger vehicles, be it light commercial vehicles, heavy commercial vehicles, ICE, even EV. India is seeing a huge, so China has already gone through that journey of, EV two-wheelers. I think 90% of their two-wheelers are EV. In India, we are seeing that penetration happening at a very fast pace. Now, in Africa also, we do see that EVs will take a larger share because the total cost of ownership also slowly EVs have been able to get to match and also better than ICE levels. And of course, policy and incentives like we have FAME in India. If we have these kind of incentives by the government along with financing models for EVs, then we see that EV adoption will also become fast-paced in African countries. Agriculture and agri-tech. And again, Kenya has been a great agri-tech hub for the whole world. And a lot of Indian players like Sharda and all have done great work in Kenya. Hospitals and healthcare, I spoke about how Fortis has the second or third largest footprint in Mauritius. So of course, we continue to see that happening at a larger scale. Power sector, of course, clean tech and green credit. So clean tech, I think everyone's talking about how renewable energy is booming in African countries. But another very interesting thing that is happening is so the land masses which are present in Africa, people are looking at those land masses to act as carbon sequestration and carbon reservoirs. Now, so there has to be a lot of restoration, planting process and all. But to really track those, and Emmanuel and I had a brief discussion around this also, drones, image processing, satellite imagery, all of that will be required. So a lot of tech companies, entrepreneurs are working on this, because unless and until you're able to monitor that, how will you really issue green credit to rest of the world? But that's something which the entire world is looking at Africa, rightfully rightfully so, for the green credit market. So I think there is that's one space wherein investment should flow, and the local entrepreneurs should be boosted to create more solutions. Who are we? Singhi Advisors, 35-year-old company for 50 years of collective experience, brought by 70 plus professionals, including myself. 1,000 assignments completed since inception, 120 transactions in 8 years, accumulating to $5 billion. And rest of it, we are part of one of the largest strategic global stakeholders called Mergers Alliance. And we cover, I think, all the sectors, 20 plus sectors, in fact, now. Including defense, including agri-tech, prop-tech, fintech, clean energy, blockchain. All the new sectors, conventional, of course, goes without saying. We also like to say this, that our strike rate is 70% and 70% repeat business, which also means that this is the rate at which we do successful M&As, because the question around success rate of M&As is always being there. I'll share this slide with you all if required. You can have a look. These are some of the cross-border deals, and we couldn't fit more in this slide. So we take pride of being experts in cross-border, and you can see Africa. I was talking about identifying gaps. I think for us, we want to do more work with Africa as a nation, as a continent. So, and we do see a lot of opportunity coming up. So, and last but not the least, a case study, which is, as I said, that this is something we all Indians, Bhartiyas take a huge pride in, the surge of financial inclusion in India. But a lot of people feel that UPI has been the sole reason, or the digitization has been the sole reason for this financial inclusion. Let me tell you, credit has played a huge role, and the fintech ecosystem has really played its part. So before I get into that, let me take you through some headline numbers. So 14 billion UPI transactions per month is what we are inching towards, almost achieved, which amounts to USD to $40 billion per month. It's giving me goosebumps while I'm talking about it. It's huge. To 20 billion loans disbursed while digital lending annually. So what I was talking about. Active credit card users, 100 million. I would say still the penetration is good, but huge scope. Co-lending, and something I'll explain what it is. USD 2 billion funding raised by fintech sector, and that is how they have been able to create this change. And 16 billion of advances given under PSL by commercial banks. So now if you see, private sector has had a huge role to play, and the homogeneous nature of this nation comes to great use to achieve this. So public sector is 42% and rest is all private sector, be it banks, NBFCs, microfinance, housing finance, etc. Now the retail mix and the total outstanding credit is 2.3 trillion USD. Now the retail mix, which is around 0.6 trillion, 600 billion USD, is the mix is home loans. So there is a huge spree of buying their own homes. The young people early on, they want to buy their own homes. So this is a trend we are seeing in India. Consumer durables, personal loans has shot up over the last 2-3 years a lot. Auto loans, gold loans, and microfinance. And then the whole MSME lending part, which is also helping a lot of mid-scale, mid-sized, early, smaller startups also, their venture funds, they are also being catered to. So co-lending, another beautiful example of public-private partnership is the co-lending model, wherein a bank, a private player like an NBFC can tie up with a bank. So it's not just public-private, but bank and NBFCs, they can lend together. So while the sourcing happens through the wide network of NBFCs, the underwriting process goes through the very structured processes of the bank, wherein both of them, of course, come together to underwrite a loan, but then the risk is shared. And of course, the reward is also shared. So generally it is 80-20, wherein 20% of the exposure is taken by the bank, while 80% is with the NBFC. So that is also another model which is working very well. While this was, I think, this has been in play since 2016, but last 2-3 years, it's like we have seen an exploding increase in the AUM, which is asset under management. So that brings me to the slide, which I hope you guys were not waiting for, the thank you slide. So I hope I've been able to add some value to the distinguished panelists and the audience. And happy to take questions now. I would leave it to Emmanuel, whatever is the structure. And happy to receive queries if you are looking for any sort of M&A activity in your business, for your business, or even advice. So thank you so much.
Thank you so much, Arunima. That was indeed candid and deep dive in this discussion. I think I'd really ask the audience to share in case you have any questions. You could put the questions on the chat. We'll address the questions after all the panelists have finished their presentation. So at this juncture, I'd like to welcome Angelique, Managing Director BDO, to share a presentation, and we have a great discussion and insights. Welcome, Angelique. I'll just share the screen.
So thank you. I'm really excited to share with you what we have been doing at BDO in Rwanda. So my presentation is going to be in 3 parts. The first, I'm going to say who is BDO, to give some image behind the people at BDO in East Africa. Then afterward, I'm going to talk about our flagship program, the one we manage for FCDO, which is called Manufacturing Africa. And the third is going to be about where we can source those M&A opportunities in Rwanda and in the entire project, which cover 6 countries in Africa. Next slide, please. So BDO East Africa covers, next slide, please, Emmanuel. Yes, we cover Kenya, Uganda, Tanzania, Rwanda, Burundi, and Ethiopia. But also because, for example, in Rwanda, we are bilingual. We covers Burundi and DRC. Uganda covers Southern Sudan, South Sudan, etc. So we have a much larger coverage. We have a regional influence, as I said. Now I think it's covering around 380 million people, the entire East Africa region. A group of professionals working together. We offer a range of services in audit, assurance, tax services, corporate advisory, risk advisory, corporate finance, and accounting and tax preparation. Next slide, please. Next slide, Emmanuel, please. Is it frozen? Yes. So the people behind BDO in East Africa, we have the slide before. We have Sandeep, who is our CEO, covering the entire group of countries. Then you have Emmanuel, who is the managing partner, and myself, I cover corporate advisory. So yes, thank you. Then after that, next slide, I'm going to talk about the flagship program that we manage for FCDO, which is the development branch of the UK government. Next slide, please. The Managing and Manufacturing Africa program is a 7-year program covering 6 countries in Africa. You have 4 in East Africa: Rwanda, Kenya, Tanzania, and Ethiopia. The slide before, please. And then on West Africa, we have Senegal and Nigeria. The objective is really to mobilize FDIs into Africa, 1.2 billion pounds of FDIs, and create 90,000 jobs. The sector is focused on manufacturing. Why manufacturing? Because it creates a lot of employment and upskills people from farming job to technical job. And through the chain of value, it really feeds a big number of family. We have seen the change in Rwanda. The consortium is led by McKinsey, and because we have a presence on the ground, as BDO, we do the work on the ground. The support we provide, we do transaction facilitation for investors and companies, both from Africa and from Europe and outside of Africa. And any companies interested to invest into the manufacturing sector, we support, both in terms of greenfield and brownfield activities. And we also give technical assistance to government, where we do sector analysis. For example, I just completed an analysis on producing lithium battery in Rwanda. The other one is on green leather, the production of green leather for export, because we have an exceptional quality in terms of raw leather. We have a lot of interested party, notably from Italy, who are interested to invest into the sector. Actually, we are going to organize a webinar with the government. Well, I will invite you. Next slide, please. On the other slide, I've already talked about the type of support that we give to the companies. So we can go to the following slide immediately, Emmanuel, if you don't mind. Yes, I talked about the type of support that we give local manufacturing company, international MNC, buy-side investor, industrial part and manufacturing, because Rwanda is, well, people call it landlocked, but we say it's land-linked. Being in the middle of Africa, we have an international financial center, the fact that we are bilingual, it's very well organized. In 3 hours, you can go to any border around the country in a very, very good quality road, makes it a really a good place where to invest. In Rwanda, I wanted to talk about the impact so far. We have 28 deals, which has been closed, and 6 have reached financial close. One of them, for 60 million, was acquired by a company in Saudi Arabia. So this $130 million in potential FDIs, 7,400 jobs already created. That is only in Rwanda. I'm not talking about the other 6 countries. And here I have a list of opportunities. They look small in size, but the potential is there because, as I said, our country is land-linked and you can feed or service around 340 million people. So we have in agro-processing, in the electrical sector, electrical vehicle startup, we have one very successful one, which has created a kind of rural Uber, helping farmers moving their goods safely from the farm to the market or to the export points. And then we have chemicals, construction, renewable energy. I think it was listed by Arunima before as a potential area of investment. So next slide, please. So we also have in food processing, light manufacturing, affordable housing. These deals look small in size, but we have concentrated for the remaining 3 years of the program on much bigger size deals to be able to really reach our targets in terms of KPIs, which we are actually quite comfortable to reach. But what I wanted to underline, and that's why I was sharing with you the map of the program, we are covering 6 countries. So that means we can reach out to any of our associates and get very interesting deals to you. The other part which is important of being at BDO, for the moment, I'm helping the sovereign fund reviewing this investment portfolio, the sovereign fund in Rwanda, which is called Agaciro, and there's a lot of opportunities in M&A as well. Coming to the end of my presentation and welcoming any question. I hope I've respected my 5 minutes. Thank you.
Thank you so much, Angelique. I hope you've given more insights on the Rwandan ecosystem and the opportunities that are available in Rwanda. And we're looking forward to a further discussion in the Q&A sessions, and also urge everyone to share their questions in the comment section. I think at this point I'll welcome Anshul to share his screen and also give us his presentation. Welcome, Anshul.
Hi, good afternoon, everyone. Thanks, Baljinder, Emmanuel, Naveen, for this opportunity. I had a couple of people present before me, and they have given a very interesting summary on what is Africa. I will just share my screen. I have done a very small presentation for everyone. Wanted to check if my screen is visible.
Yes.
Yes, your screen is visible.
So very quickly, Africa, I have been visiting Africa for the last 10, 12 years now. I have visited multiple different countries. It is a large continent, very interesting in terms of opportunities. And when you look at it from an overall opportunity perspective, huge opportunities on infrastructure, on financial inclusion, on manufacturing. It's a fairly large market. Certain pockets, so there are pockets which are heterogeneous, pockets which are homogeneous. So depending on how you cut and dice the market, multiple different ways to look at it. As Investcheck, we are from Africa. We are a bank with its roots in Africa. We started in South Africa way back in the 1970s. And over a period of time, we have grown along with Africa. And today we are present across 18 different countries across the world, including we have a bank in UK. In India, we are a full service advisory outfit plus a credit fund. We don't have a banking license yet in India. Also in India, we work very closely with SBI. SBI Caps has a 20% stake in the entire Investec India platform. From an overall perspective, what I have tried to cover here is two parts to my presentation: a very brief overview on Investec India, what we do, including quickly on my overview as well. And then I'm covering basically the financing of M&As generally. What are the various different ways of financing M&A, and what are the pitfalls to look at. Investec Group, we have close to 8,200 employees worldwide, close to $35 billion core loan book. We are globally a mid-corporate bank. If you, quite a few of you will know Investec from Africa. We generally lend to mid-corporates in Africa as well. In India, we started our journey in 2010. We do solutions across the board, which includes credit, corporate finance, which is M&A, cross-border, local. We do institutional equities, and we do ECM along with SBI Caps. My background, Baljinder had given a broad overview. I have 25 years of experience on corporate and investment banking with various foreign banks. I worked with Bank of Nova Scotia, Commerce Bank, GBS, KBC Banking Group, ICICI Bank, which is a local Indian bank, and currently I am with Investec. On M&A financing, very briefly, what I have here is what are the products available, and in terms of how do they stack up in terms of flexibility and in terms of cost. So you basically have the senior secured facilities, which are asset-backed loans or revolver loans or term loans, which are slightly rigid in their construct but are cheaper. You then move to unitranche and second lien loans, which are mid part of the way, and then you have the junior capital followed by common equity. So Investec can work across this entire spectrum, whether it is India or Africa, in terms of arranging financing for any of the acquisitions that people are evaluating. What you need to look out is, because multiple geographies are involved, we need to look at the legal structures, the taxation, what are the future plans in terms of exit, etc., and whether there is a refinancing involved. So based on that, we can do a proper structuring advisory for any of these transactions. How do we typically evaluate? We basically look at financing objectives, preparation of the documents, and then the execution once we discuss and agree on a roadmap. So this is broadly about us. In case somebody wants to understand any of this better, we can discuss this one-on-one, or I can take Q&A. The idea was to keep this short because it was only a 5-minute chat. Thanks.
Thank you so much, Anshul, for your introduction and sharing more about Investec. I think we'll have more discussion in the Q&A.
Right.
Yes, and I'm hoping the audience will have more questions to discuss. At this point, I think I'll welcome Yogesh, who is a final panelist, to share with us his insights. Welcome, Yogesh. Yogesh, you're on mute.
Yeah, can you see my screen?
Yes, you can see your screen now.
Yeah. So as I was saying, thanks to everyone. So I think in terms of my presentation, it's going to be hopefully a short one. And basically it's in three parts. So a brief introduction of Ciel, who we are, what we stand for, and then a bit of our journey so far in terms of looking at startups and VCs in Africa, but also in India. And basically where we are in terms of our search for partnership or for investment or alliance opportunities in this space, what has been our thinking process. So as many of you probably is aware, so Ciel is a local Mauritian regional conglomerate. We have been around for over 110 years. And for a conglomerate out of Mauritius, we are quite diversified in terms of industries, but also in terms of geographical presence. As you will see, we are present in India, Bangladesh, but also in the East African jurisdiction, Uganda, Kenya, and Tanzania, and also South Africa. And we also have a strong presence in Madagascar through our textile business. And Ciel has been one of those pioneering company out of Mauritius, which has invested in Africa for quite a long time. Our initial investment in the continent is through Madagascar, which we did in the 90s. We went into the sugar business in Tanzania in the early 20s, and recently we have increased our exposure in Africa through our acquisition of one of the premier hospital in Uganda, which is IHK, now IHK CKR in terms of operating run. So we're quite diversified, both geographically and from an industry perspective. But we also have a long association with both Africa and India, and for the Indian side of the business, this year we're celebrating our 24th year of operation out of India through our textile business. That's a bit of an overview of our presence and our both geographically and from an industry perspective. Just in terms of the exposure from a portfolio perspective, it's very well diversified amongst the cluster, amongst the industry that we have taken some exposure. I think the keynotes to take from here is that, with the exception of the property cluster, which is focused very much in Mauritius, all of our businesses from property and the hotel industry, I must say, the other industries like textile, healthcare, finance, and agro, we do have a mixture of either Mauritian, either African or Indian flavor to our business and operating model. That's the portfolio, and one of the key themes of Ciel throughout its history has been to grow and to develop through partnerships. And here on the screen you can see some of the partnership we currently have, either at the holding level, so that's at Ciel Limited level, where you have the likes of Peugeot Invest, Fumalac, and Tantosang as strategic partners from a shareholder perspective. But also we do have partnership with DFIs at holding operating level. So in the finance cluster we have Proparco and IFC in the shareholding, and also we do have some well-recognized name in various fields which are in partnership with us across our clusters. And as Arunima said earlier, one of those players used to be Fortis, which we have been in partnership for around 10 years with, and the partnership came to a natural end around 2019. And right now we are managing the healthcare business, but that partnership actually set the foundation for our healthcare business, which now is growing, is in a different growth stage and expansion stage. So that's a bit of the group. I wanted just to give you a flavor of what Ciel stands for and where we operate. So now in terms of startups and VC investment. So I think for us from a conglomerate, from a holding perspective, the journey started a few months or about a year ago. Where basically we looked at our portfolio and questioned ourselves in terms of, how do we give an impetus to our business in terms of growing their book, and acquiring customer. Okay, of course there is your M&A. You will look for your mature, if I may use the term, acquisition, looking for opportunities. But also we thought and we felt that a big opportunity for us as a group is to look at startups, VCs type of investment, where you have a degree of innovation and an opportunity to grow the business, which is much wider than your typical M&A activity that we may undertake. So we did an exercise internally. We spoke with a number of VC managers. The initial idea was to set up a corporate venture fund, but through various discussion, capital allocation decision, we decided to put on hold that exercise. But having said that, what actually it means for us and in terms of our day-to-day, in terms of business development and transaction is actually we believe that to grow our existing businesses and to enter new areas of business, it is important that we have a close ear to the ground in terms of what's happening in the startup world. And for us internally, what we are doing is we have divided our businesses into clusters. But within each clusters, what we are looking for is basically we have narrowed our area of interest along clearly defined categories. I'm just going to enumerate a few of them. So, for instance, we're looking at automation and digitalization in healthcare, in hospitality, but also in textile. We're looking at solutions for supply chain and manufacturing, and that's mainly around the hospitality cluster. We're looking at payment services and training solutions for our healthcare and hospitality. So from trying to do a corporate VC fund, what we are doing is we are looking at VC opportunities, which has some of the solutions to some of the business questions that we are asking ourselves, and trying to make sure and trying to find out whether there is an opportunity for us to actually partner with those companies. Our preference is firstly through a commercial agreement or through an alliance, and if things works out as we expect, then eventually we can look around at a possible investment opportunity. That's a bit of a broad brush in terms of where we are, what CL stands for, and our journey in terms of the topic we're talking about, which is the M&A in the startup universe in Africa and India. Hopefully that covers the points. Thank you, Emmanuel and Bajinder.
Thank you so much, Yogesh, for your overview and insights on contribution of CL and in the M&A space in Africa and different other sections, including India. So I think at this time I'd welcome Baljinda, if you could hear me.
Yes. Thank you, Emmanuel, and I'm very happy that we still have a good participation. Often in events like this, the participation drops considerably after we start. So I'm very happy. I think all the panelists have made interesting presentations. I have personally learned a lot, and I'm quite keen that I have kind of stayed on and listened to all the presentations. One of the things that sort of struck me from, and I just want to take the privilege of being a moderator and ask a few questions. Obviously, I saw from Arunima's presentation that the energy sort of potential opportunity is about $818 billion. I'm saying on the renewable front. That itself, I think, is tremendous. And one of the ideas that people like me who also have been in the investment banking business in the past, realize that there may be a considerable opportunity for consolidation in this space and build real large corporations. And we've seen this happen in India in the past 10 years, and I see no reason why some of this would not happen. So maybe so that's one thing. The other thing is, because we kind of tend to focus on India and Africa, we would also want to see whether whether there could be large Indian corporates who may want to make investments in these consolidated sort of portfolios um, um, at some point in time. So, Arunima, that's my question for you. And then for Angelique, my question is, I think Angelique, since you've been working with sovereign fund, so whether you see an opportunity for, and I'm just so reminded, very recently I had an opportunity to attend a sovereign wealth funds conference, and I did see that funds are gradually kind of opening up to make investments in funds, in VC and early stage funds, and whether you see something like that with the Rwanda sovereign fund. And thank you, Yogesh. I think I really admire CL for being such a large company and yet being able to make investments in the in ventures, early stage ventures. And I've been associated with the group for some time, so I know that. Yeah. Anshul, I know that you've kind of been mostly involved on larger transactions, but I would also want to hear your views on whether, as I explained, if as investment bankers, if you were to consolidate some of these portfolios of smaller companies, would there be appetite for investment from a large, sort of financial company like yours? So those are my questions, and then we'll open up I think Emmanuel or Naveen, you could still continue to kind of moderate in terms of who to allow to speak, but that would be my
Sure.
my questions. Yeah, thank you. So start with Arunima.
Yeah.
Hi, Baljinder. Thank you so much for the question. So I think renewable energy in India itself has seen huge investment. And I mean, be it private players like Adani, Tata, etc., or equally attracted foreign large investment funds, be it Macquarie's, be it Brookfield or SoftBank. So I think, and because of these renewable projects, because of the very long the PPEs that they hold, they tend to change hands over the years. And during that period, of course, the technology changes and all lead to consolidation, definitely. So, because 25 years, there will be technology changes, there will be new players, there will be some fatigue hitting in. So, we do see a lot of M&A activity there in the renewable infra and energy sector. And a similar story, I don't see why Africa wouldn't see a similar story, be it wind, solar, even bio waste to energy, even hydrogen. Because now South Africa, the I would say the edge they would have, that while they are getting into more and more new projects, they have the edge of getting the latest of the technologies. And be it solar, we have seen a huge improvement in the solar cells and the equipment. Now a lot of composites are being used for improving the efficiency of solar cells. Even storage, we are seeing a lot of improvement. So if the right kind of technology, of course, capital can come in from India, from international markets, but yes, Africa will see a lot of, I would say, new projects and then consolidation at some stage. So that would be my submission.
Thanks so much, Arunima. That's really insightful.
Thank you.
I think that in time to come, we definitely will have more sessions as to how the progress is, because the renewable energy is going to remain the key sector, which will have a long-term focus. So it'll be very interesting to have you over again, at some point of time and see how we can take it further. So thanks a lot for your
Would be very, very happy to be an honor, Naveen. Thank you.
pleasure. Thanks. Angelique, can we trouble you?
No trouble at all. No, the sovereign fund of Rwanda Gachiro has the mandate to invest into fund, and actually they are looking actively for opportunity to invest. But there's the Rwanda Social Security Board who invested already in a fund. And I remember, I think last week they announced their investment into a communication tower company in Rwanda. So just to reply to you, they're open to that opportunity,
Okay.
and they have the mandate within the investment guideline. Thank you.
Yeah. Yeah. Thank you.
Anshul, over to you.
Hi, everyone. So the question, Baljinder, you asked is if there is a portfolio that you are creating, and then whether there are financing opportunities or whether there will be interest from larger conglomerates. I'll give you a very interesting insight. I have been watching the renewable energy industry in India since early 2010-11. Those days, typically any solar project were pretty expensive. A 25 megawatt solar project would take close to 250 to 300 odd crores to set up. That is 2.5 to 3 billion INR rupees to set up. Comparative cost today is fallen by almost 70%. So today, if you are setting up a similar solar power plant, it will be probably 30 cents to what was the price almost 14 years back. But what has helped this industry is stability. So there were PPAs that were signed by various state utilities, central government utilities at price which was almost 15 rupees to 25 rupees a unit. Today we are signing PPAs at 3 rupees a unit, but those PPAs are still being honored. The utilities and government and other counterparties are paying as per the old PPA. So typically for all of this to work and the entire ecosystem to develop, you need stability, you need comfort that long term the contracts will be honored, they will not be reneged on. There is stability in terms of taxation, etc., etc. And today, so 15 years back, 25 megawatt used to be a large project. Today, we are seeing increasingly most people setting up a gigawatt single project. So that change has happened in the last 15 years, all because of policy stability and ensuring that the contracts are honored. So that story will also have to pan out across Africa. If you look at Africa markets, there is most of the projects today are being done by the government on the infra side. But most governments today want to move to PPP model or BOT model. And now for that to happen, they have to prove a track record there. They need to honor their commitments, ensure that things don't change and during regime change, etc., etc. Because biggest challenge in Africa is when the regime changes, there is a change in policy, change in approach, which makes it very difficult for long-term investors to commit capital. So that is also one of the reasons why you don't see a lot of private players or sovereign funds coming in. You still see the multilats and DFI is financing most of the longer tenor projects within Africa. Again, on consolidation theme, we have seen this across industries. Even within India, we have scenarios where we have seen companies consolidate into a particular segment. So if you are creating a portfolio which is of companies which are similar type or have some complementarity, yes, it will be of interest to a larger party, especially given the length and breadth of Africa, where there are multiple different countries within the same continent. So somebody wanting a footprint will have to consolidate smaller or mid-sized businesses to have a footprint across the continent. So yes, that is possible to do, and we can definitely look at that.
Very good. Thank you. Can I ask
Thank you,
just
Anshul.
one follow-up question, Naveen, if you permit me?
Sure.
Yeah. Anshul's, I know of Investec Bank for many years now. I've actually worked with them about 20 years ago. And I know that Investec Bank has always been very creative and very entrepreneurial. Okay, so I know that you don't do the plain vanilla, banking. I think you are a specialist kind of banking. I've seen some exotic products also, projects done by Investec, including in the real estate space and so on. Would you also, for instance, extend advice on PPPs to governments or to large public sector bodies who who may want sort of advisory on how do you kind of put this whole sort of project
Right.
together? Do you consider doing that? I mean, do you do that?
Selectively, yes, we are working with a few governments. While not many people know this, Investec also has a fairly large government sovereign business under our ECA division, where we lend to sovereigns directly also. So there we do interact with them, where we are happy to interact, help them put a policy paper in place. But it will also, while it is much more easier to do this on the Eastern African part of it, West Africa is still a challenge, as we are all aware. So,
Yeah. But would you also, so last, I think couple of months back, we all read this news in the, I think it was Foreign Affairs magazine that put out this whole thesis, which really was so appealing. It spoke about how at certain point in time, the population kind of, just the consumption story is so huge that the governments kind of become irrelevant because people have to eat, people have to clothe, and also now some of the ways in which the governments could kind of keep people out of the access to opportunities which they could pursue on their own. They could do that in the past. Now they can't do it. So their ability to kind of constrain people or populations or control them has reduced through technology and so on. So I mean, I just believe in that, and I think that while the story on the government side is bad and it continues to be bad, but on the on the consumption side, on the population side, as investment bank, where do you see that? I mean, do you also believe in that, or are you kind of skeptical, or what are your views?
so typically, what will happen, Viljender, say, for example, if a particular regime is not very favorable in terms of regulatory environment, you will not commit fairly large investments there. You will serve that market out of some other location. So typically, what we have seen people do is set up a manufacturing unit in a neighboring geography and service this to a dealer distributor. So it doesn't help with the country in terms of overall growth, right? What do you typically want is that manufacturing to come in, infrastructure to come in. And for that, for any investor, whether it is on the private side or on the strategic side or on the fund side, they want a stable regulatory environment to be there. If I think my money is at risk and there is an unusual political risk or stability risk I'm taking, I would not commit large sums. So that challenge we will always face.
Is it also not related to kind of Sorry, I don't seem to
No, no.
monopolize this conversation, but is that not related to the larger geopolitical environment in the sense that, and I give this example to people that in one of the large Canadian mining company has been running an operation in a highly profitable operation in Madagascar for many, many years, for like 30 years now, and it's hugely profitable business, and governments come and go. So if you look at Madagascar on theory or, apply whatever,
So that
whatever,
is true for most of the mining resources companies there. But
yes,
whether you look at it in Nigeria, in the Congo Basin, so all of these places, the resource companies have managed to survive. But we better don't go that path. How and why
okay,
of it. So
okay,
let's
okay, no,
avoid
thank
that.
you. Okay,
Yeah.
Naveen, I'm done.
Thank you, Baljender. I think Anshul, there's one more question for you. Sorry,
Yeah.
Angelique, and just one more. When you look at the size of investment requirement for African startups, is Investec is having a sort of an funding setup where they can help a smaller fund requirements for African countries with startups.
So we do fund across Africa, Naveen. We have as small exposures as $5 million also on the mid-market side. But it will all depend on the credit that we are underwriting, who are the promoters, which geography, etc. So while I don't have a blanket answer, but cases which make sense and where we are comfortable, we can even do a $5 million transaction. That is not a challenge.
Yeah, because for really integrating and bringing African startups also to a level, they do need initial impetus
Yeah,
support. So it's good to
yes.
know. You know, uh, Yogesh, we had a question from Muktish Narayan. He has asked whether CIEL has ever merged or acquired a VC-backed Mauritian startup. or you are planning to have, do so one? You are on mute, Yogesh.
Can you hear me now?
Yes.
Yes, yes. So that I was saying that's a very specific question. So no, I don't. We haven't merged or acquired any VC-backed emerging startup yet. As I said, we have just started our journey in terms of the startup and VC world. We are looking at opportunities both across the clusters, the financial cluster, the healthcare, hospitality, and textile. So we are aggressively looking at opportunities. So let's see what the future will entail for us.
Thank you so much. I think to all the panelists, Muktish had asked another question. Any specific advice, for startups you would like to give, because you all have had experience and exposure. So it would be very nice to just give one maybe or two specific pointers for what startups should look for and to avoid. I think I would really request two points each from all of you.
No, I will go first if nobody else is. So I have worked with multiple startups within the Indian ecosystem, and over the years, what I have seen is ideas might change, they might fail also, but when somebody is backing, it is you are backing the team. So please ensure that the team is solid. You have your heart in the right place. Business models will always evolve, but have your heart in the right place, have your processes in the right place. Don't try to short circuit your processes and your values. As long as you adhere to that, the business will keep on changing. I think that is the most important part there.
Thank you, Anshul. Yeah, Angelique.
Yes, the 70% of my work is working with startup and trying to make them investment ready. And what I've seen, I really advise them to work on their corporate governance structure. Usually this is something at the back of their mind, and also not to raise too quickly. It's really important to have the model confirmed, to have it solid going before starting raising, because they put it in their timeline as the first element to do. Try to raise when I really think it should come at the end of the process. Thank you.
Right. Thank you so much, Angelique. Arunima.
So yeah. So I have worked with my share of startups, having evaluated many. I would agree with Angelique on not raising too fast, and also setting the valuation expectation right. Not getting into a race of, my peers or somebody else has gotten this valuation. You have to justify the valuation to yourself before putting it out in the market. The second and very important, I think, advice from my side would be, when particular startups are working on prototypes or a smaller lab scale, if say it's a any technology based company, commercialization of it and what the viability of the commercialization is something you have to take into account, and you have to be very clear on how much time is it going to for your startup and what are the resources you have to put in, so that you take it to a logical conclusion, so that
Correct.
all of that requirement is set. I mean, some unknowns will always be there. Certain things you don't know. Maybe you're creating a market, right? But you have to look at the right parameters to understand the commercial viability when you have to reach a scale. So scalability and the viability at that scale is something which startups must look at. And if you have that right, it becomes very easy to go into the market and have your investors believe in that story as well. But you can't be doing some things and leave rest to the incoming investor, or maybe somebody they would come and help you out. So I think promoters need to start thinking, or entrepreneurs need to start thinking that way as well.
That's great. I think that's a real good input, in terms of.
Sorry, Naveen, if I may just quickly interject, I know that some people had mailed their questions beforehand, which is what we had requested them. So could you maybe take those questions also and see if the person who's asked that question, if he's there present in on the call, maybe we can give them an opportunity to ask the question directly. If they're not present, then maybe you could just.
Yeah. So I think Emmanuel, if you could just look that up. In the meantime, I think we have Yogesh who's left to
Yes.
just give comments. So Yogesh, you're mute, boss.
So I'm not going to repeat what the other panelists has said in terms of governance, in terms of valuation expectation. I think one first and foremost, I think in terms of startups, I think keep on the creative ideas. I think that the creation is what's driving the whole VC environment, and I think they need to keep on going, do what they do in terms of bringing new ideas to businesses. I think from my perspective is when they're going to, especially to see corporate companies or conglomerate to the like of Shell, is to make sure that they are answering the business question that we have and that we're trying to solve. So I think it's a different mindset, because when you are in a corporate world, when you're trying to look for a VC opportunity, invariably you're trying to answer a business question that you want to solve. And the VC is one what you think is the fit solution for your business question. So I think this is something that needs to come out when approaching and talking to corporate firm. But also, having said that, I think, as I said, I think the other part of the equation is also the possibility and the growth opportunity that their solution or the idea may bring, and to bring emphasis on it. And as Arunima has said, is actually then the question is, how do you scale it up across markets, and how you replicate those business model from your home market to other market? Because when we look at opportunity from our perspective, we are based out of Mauritius, but Bajinder and Mauritius is very, very small. It's 1.2 million people. Our addressable market then to some extent is East Africa. And for us, what we want to make sure is that once we have a solution product, how easy it is to replicate the solution and scale it out of the home market to other markets. So I think it comes down to the valuation angle, it comes down to the sales angle. Is actually how to think once you have it, how you can make it scalable, and how to basically show the potential of the product that you have to potential buyers and to potential commercial arrangements that you may be thinking of.
Okay, so I think yes, Angelique, you're mute.
I have a point, I think, which is very important. I don't know about the rest of the market, but in the market I know, East Africa, startups are not funded by the banks for many reasons. It's too risky for them, and regulatory environment almost forbid them to be funded by the banking sector. So the only solution for them to grow is through the private capital. So that's why I really support this initiative, and to try to find alternative solution, because without that, you don't have a startup sector which grows, and you don't have kind of a middle class as well. So I think it was important to underline that point. Thank you.
Thank you so
So
much.
I would just add to that, Angelique, how it happens in India. So we do have, so of course, banks don't lend to startups, right? Because they seldom have any collateral to offer, and unsecured lending, it's too risky for them, right? But in terms of funding, government has created funds, they have created subsidies, they have created PLI schemes, which are helping some of these startups to set up, but those could be in certain sectors which government wants to promote, for example, electric mobility, for example, pharma, or technology. So there is a push by the government, but still, I would say majority of the funding comes from the private sector into the startup ecosystem here as well. That said, there are government funds directly by the government or PSUs. They do have funds which support these startups.
Okay, great. So I think there are some questions that we had received on mail. So we had received how does consumer finance work in automobile sector, and does any of the government or private player offers loan on EV two-wheelers, or majority market operation is on cash purchase basis? This is specifically for Africa. So if Angelique or Anshul, if you're aware, Yogesh. Okay.
Sorry, Naveen, not too aware. It will also depend on which particular country in Africa. So not everywhere consumer financing is readily available. So difficult to.
I think typically East Africa, if Baljinder, you can add, please.
Yeah,
East,
I think we could just check who's answered that question, which geography that person belongs. Maybe we can give us
no,
slightly more.
his name is not there,
Okay,
unfortunately, person's
okay.
name.
Yeah, maybe
So,
Angelique can. I mean, the little I know that consumer financing is actually expanding quite a bit in Africa. Angelique will probably um, allude to this or or confirm. Uh, I mean, that's my kind of answer because we've seen that, and Arunima, in many ways, the developmental journey is not very different. We've seen, companies like AU Finance become banks now today, and I remember the two brothers. I knew them very well during my college times, and they become huge conglomerates now just through second-hand vehicle financing. So I think those, at least we see those trends, at least I see those trends also in Africa. So my answer would be yes. Uh, I'm sure we can research that and find out who does. I think it's a good exercise for us to research exercise for us to do.
yeah, yes, Yogesh.
So just I think, as you said, I think the consumer finance question it depends on jurisdiction and a particular market. But I think from what we're seeing here out in Mauritius, part of it actually now is the green financing, particularly around motor vehicle. I think that's a theme to be aware of, where you do have some preferential rates, be it through the DFI that's actually giving it to the financial institution, and it's percolating to the consumer. That's one angle, one field that we're seeing is quite developing. And it's twofold. First is that the technology is there. You have more and more green vehicles and green engines in the market. On the other hand, you have, from a financing perspective, you're getting to some extent some subsidized rate being pushed down the market, which makes it quite attractive. So that's one dynamic that we're seeing, at least from a Mauritian point of view.
Oh, very nice.
Let me just add, sorry if someone was saying something. So I wouldn't have any better idea than what has been added, what's happening in the African market. But generally, EV financing is a very important part in faster adoption of electric vehicle in any country. Now, why banks or any lending institutions, NBFCs or smaller institutions are a bit reluctant in financing EVs is because of course, uncertainty in what is the resale value. And second, the total the insurance part of it. So how do you track or how? But I have seen personally, having tracked this sector very closely in India at least, that is changing very fast. So resale value also is now that there are more EVs who have reached their salvage point. There is more clarity on what could be the resale value. And secondly, with all the telematics being developed, all the technological part, there is much more clarity which insurance people get, that okay, you will know at what stage, what is the temperature, at what speed was the vehicle running, so that they can provide the insurance support. These two factors, when they fall in place, the financing part becomes easier. So any country, the financing will only depend on why is someone not financing. But financing is very important, be it fleet operators or individuals. It is going to be a very important, I would say, if there were three legs to the tripod, one would be financing and boosting the EV ecosystem.
Yeah,
Very nice.
and sorry if I may just quickly add here to what Arunama is saying is that, look, I mean, overall the kind of the capitalistic forces remain the same. Banks want to make money, they want security and so on. I think what a bank wants in the US and what a bank wants in India or in Southeast Asia or in Africa, they just want the same thing. It's just that risks may be kind of specific or localized, like Ajul spoke about government risk. Okay, but there could also be other kind of risks and so on. And I think it's a great point to the extent that you can measure those risks.
Exactly, and it becomes like a chicken and egg, because the moment financing cost comes down, the cost of ownership is also, the total cost of ownership also reduces. So the adoption becomes faster. So the entire, I think there has to be a boost, and thankfully, fortunately, we have seen that push coming from the Indian government. So I hope the similar story follows in Africa as well.
Yeah, thank you so much, Arunima. Yeah, Angelique.
Yes, What I've seen post-COVID is the development of a lot of guarantee schemes. So all the development partner, they've put in place guarantees systems where the bank can cover up to 95% of their risk. So the risk is more on, on European development entity than on the consumer. I will not say that there was a boom, but now the people are more comfortable to go and ask for loan. Banks have a new program, which is digitally based. It's very quick. In one day, you can get access to a car loan and some small housing loan. It is growing. But now they're also monitoring the risk and try to see how is the level of non-performing loan, how the consumer is respecting his repayment rate. But the fact that those guarantees have been put in place made the banks less timid in lending to the sector. And as Bajida said, we have a lot of microfinance entity which are actually ready to be bought and becoming banks. And they have a lot of range of digital program. They are closer to the population. They know very well how it works. So I really think there's an opportunity in that sector. Thank you.
Great. Thank you so much. So, is there anybody from Revamp Moto on the call just now? If you can just message, because, they are, we'll just wait for 1 minute. So Revamp Moto is a company based out of India. They are looking for, setting up base in different countries in Africa for distribution. So, it will be very interesting to touch base with them separately. Since they are not here right now, we will try to set up a call and see what are their expectation and what they are really thinking about. And maybe, we can see how to help them out in this. So they had a question about, getting into different countries in Africa. So I think, thank you so much for all the panelist members for sparing time.
Great timing, huh? We finished on time.
We are on dot. So
yeah,
thank you so
great.
much. Really appreciate the time taken, and the effort required for preparation of your presentation. Believe me, even 2 slides take a lot of effort to put the information in the right format. And okay, we have Pritesh here. Sorry, now he has just messaged. So hi Pritesh, would you like to speak? We could arrange that. Okay. Can Jeffrey unmute Pritesh?
Hello, sir. Hi. Hello, everyone. I am from Revamp Moto. I'm Pritesh Mahajan. I'm one of the founders of Revamp Moto.
Hi, Ritesh. Please go ahead.
Yeah. So actually, at Revamp, we are an electric vehicle manufacturer based in India, and we have made modular vehicles, basically, which usually can empower the gig workers. Basically, this was initially just a plan of empowering the Indian gig workers, but then we realized that the entire initiative basically and the entire motto that we are working on, it can actually empower people across Africa, people across, let's say, Mexico, people in the Southeast Asia. This is a very big problem, and actually we are making two-wheelers, electric two-wheelers, that will help people to earn their livelihood and maybe make more money on the two-wheeler using these vehicles for business, and as well for using them for their delivery jobs or something. So we were looking at expanding to the African countries, and that is why my question was if there is a specific, let's say, forum where we could find such partners, let's say, who are interested in probably helping us set up our subsidiaries across the African countries. And probably if there is not such a forum, if we can make such a forum where Indian startups like us probably can discuss with the like-minded people from various countries, probably let's say from Africa, where these guys invest into the operations of the African subsidiary, and we provide the technology, and we jointly set up a factory in Africa, and we actually solve the problem of the gig workers across Africa as well. So that was my question.
Yeah, so if I may answer Naveen, Pritesh, actually, this is the right forum, except that today's session, we deliberately kept it kind of general in nature. But EV is one of the things that we really, not just EV, but anything that involves low-cost technology or a pioneering idea and so on. We think that there is both, I mean, bilaterally, and this is something that we really want to promote. It's not just always about money. It's not always about material. I think ideas have tremendous value, economic value, and we want to do that. So happy to sort of take that on a separate sort of. We want to also, as we go further, we want to kind of have discussions on specific sectors. So there we
Correct.
can bring in people like you, because I think at a very preliminary level, you can get to know the realities on the ground,
Correct.
before you kind of make a slightly more serious effort. Yes, I think that we will be happy.
Yeah, we recently started like offloading our electric two-wheelers in Mumbai to empower, let's say, the delivery riders of Swiggy, Zomato, Zepto, all such kind of delivery companies. And I think I'll reach out to you separately, sir,
Yeah.
for this. I'll email you separately about this. And I think this is a very good forum where startups like us can benefit at probably looking at partners to expand globally,
Yes.
ASAP.
Yes.
So thank
Yes.
you for arranging this.
Okay, thank you. So I think, Emmanuel, you have the last word. Unless there is any more question. Emmanuel has been working very hard on this, so I think he deserves to have the last word.
Yes.
Thank you so much for all the panelists. I'm really grateful for the opportunity to have you to share insights and just give a deep dive on the different aspects in each of your specific industries. It's been an amazing session where I believe all of us picked one or two things that we can implement in the next few days or the next few months. And I'm glad that Baljinder, you organized and helped us to set up this session. We're looking forward to subsequent sessions like this, where we could continue with this conversation that would bring tangible results, so that we don't just leave it at online session, but we also extend the invitation to the summit, which we'll have here in Mauritius next month. So I think it would be good to this as a starting point where we have the online conversation, and we could continue the conversations on the summit next month, 18th, 19th here in Mauritius. So thank you all for joining. Thank you all for taking the time to prepare and be part of this conversation. Looking forward to a great collaboration and a great just building synergies. Thank you so much.
Thank you, everyone. It was an absolute pleasure.
Oh, well
Thanks,
done.
everyone.
Thank you.
Bye.
Thank you very much. Yeah, it was great.
Thank
Yeah.
you.
Okay. Thank you.
Thank
you, everyone. Bye.
Bye.
Bye-bye.